Hey folks, welcome to a product review at Finominal. Today we're going to analyze GMO's Benchmark-Free Allocation Fund that trades under the ticker GBMFX. Now, as per its name, this fund doesn't have a benchmark, which simply gives GMO as the asset manager a bit of flexibility how it allocates across asset classes. Now, the fund is successful. It does manage close to $2.5 billion. And let's find out what makes it successful. So, despite the fund not having a benchmark, the first thing that we're actually going to do is a benchmarking exercise. Simply because we still want to see what should we compare this with. Now we can see here that the suggested benchmark, as per our fund analyzer tool, is the S&P Target Risk Conservative Index. Now that's a simple equities bond combination that allocates 30% to equities and 70% to bonds or fixed income. So let me select that over here, and then we can contrast the performance of GBMFX to that index. Now, what we do see that the track record, it does go back to 2009, which is great. And so you have about 15 years of track record, where overall we do see that the returns were different, but the total return is almost identical. And you can also look at that from an excess return perspective, which simply highlights that GMO hasn't been able to beat the performance of this quite simple S&P Target Risk Conservative Index. Now, let's see in terms of what are the key drivers from a performance perspective. And so what we do see over here, and let me change the benchmark back to the S&P 500 for this returns-based factor exposure analysis, that the betas to asset classes are quite mixed. We do see that the exposure to equities, as proxied by the S&P 500, has been time varying. You can see sometimes it's higher, sometimes lower. You can see the exposure to bonds has been positive, but also all over the place, while the exposure to the US dollar index has been flat to slightly negative. And that's exactly what you would expect with a benchmark-free asset allocation fund, that it doesn't provide you static exposures, but it's a manager that expresses his opinion, and the exposure to asset classes fluctuate over time. Now, this is with regards to GBMFX on a standalone basis. Now, let's compare that to a few peers. And what you've selected over here is other funds that are kind of like absolute return, multi-asset, or total return focused, from Allspring, Turner Hancock, Finominal, and RSQ. Now, the first thing that we're going to do is see if these funds are actually comparable to each other. Now, I do see that the correlations of GBMFX to these other funds is from very high in the constellation of Allspring to low. Having said that, what you're actually getting in terms of the correlations to stocks and bonds is very similar from all these 5 funds. You can see they're all quite positively highly correlated to equities. So this is the correlation to stocks, and mildly positive related to bonds. And that's actually a pretty good fit in a sense that these 5 funds over the last 10 years have been providing you kind of like a similar equity bond combination. Now, if we move on to performance, we do see that the performance since 2014, well, we see roughly the same trends in all those 5 mutual funds. We do see that GMO's product, GBMFX, has generated the second highest return after the product from BNY Mellon. Now, that's from a total return perspective. We see actually one here, the RSQ fund has done significantly worse. But I would argue that what's the goal of this fund should be to provide higher risk-adjusted returns rather than absolute ones. And if you look at the Sharpe ratios over the last 10 years, we do see that GMO's fund has generated a Sharpe ratio of 0.45. But that is pretty much in line with the Sharpe ratios of these other products. I'll ask you some quite words. So stated differently, right? GBMFX, right? It has kind of done in line with its peers. Neither particular impressive from a total return perspective, nor from a risk-adjusted perspective from a Sharpe ratio. Now, so that's GBMBF versus some peers. Now, the other question that we asked ourselves, is there a cheaper alternative? And the kind of obvious one is GBMFX versus kind of like a cross asset allocation product. And here we have one from iShares, which effectively is the core conservative index. And if we look at those two products, effectively what we see is that the return since 2009 is, well, very similar, right? So, and just for full disclosure, AUK is effectively the same thing as the S&P target risk conservative index that we looked at earlier from a benchmark perspective. So you can buy the benchmark, right? And this kind of, I think, summarizes our view on GMO's product, that it does behave occasionally different than an index like AOK, but it doesn't provide you much more than that. So from a total return perspective, we had 15 years where GMO could have generated a higher total return or a higher Sharpe ratio, but GMO actually hasn't accomplished that. The Sharpe ratios are identical. And so that kind of concludes our review of GBMFX, right? It is a fund that has quite a lot of flexibility, given that it has no benchmark in terms of how to allocate across asset classes. And if you give an asset manager the flexibility to do so, you would expect better either total returns or higher Sharpe ratios than simply by buying an ETF from iShares that charges 9 basis points. Hope that helps. Have a nice day.